Hello class, and welcome to our fifth lecture series on Principles of Accounting or Financial Accounting. And I am your instructor, Jamal Haider. So today we will be talking about Chapter 3, which is Accrual Accounting and Income. So our first learning objective is explain how accrual accounting differs from cash accounting. So let's just talk about the difference between these two. So the accrual accounting, basically it records impact of transaction when they occur. So that is the biggest difference between accrual and cash. While the cash records only cash transactions. What does it mean? Accrual means, okay, if sale happened now, you record now, right? You receive order and the customer said, I will be paying you later. But sale is confirmed today, right? So you will record the sales on today's date. While the cash basis is that whenever you receive cash, then you record the sales because you don't have any credit system over there. If the customer said, okay, I need this many amounts of pieces or units, and you said, okay, send whenever you want, please send cash, and I'm going to give you the goods. So when they receive cash, then they say, okay, sale happens now because only cash sales are available. No accrual accounting over there. No credit going to be given. Right? For example, mostly the cash basis accounting systems are for small businesses. Right? Noodle shop, coffee shop, printing shop. Right? So you go, you pay the money, you receive some coffee for prints or for for one meal of noodles or something. For beauty salons, hair cutting, when you pay for that, they only have cash, services available. In some circumstances, they are allow you to, give you some credit, but only to those customers who are very frequent and some kind of have some kind of reputation or know-how. And there are very, very ignorable percentage, you can say that. Right? So accrual accounting is required by the law, and law is generally accepted accounting principles. Every country has its own version. For example, we will say that GAAP USA, GAAP China, GAAP Pakistan, GAAP India, GAAP UAE, GAAP Oman, right? So everyone has its own version. But the basic law is GAAP, which is generally accepted accounting principles. So there are two laws: generally accepted accounting principles and IFRS or FASB, right? But mostly the book gonna cover you with this GAAP. There is no difference. Only the difference is between these two standards are just the categorization of financing activities and operating activities in cash flow statement. When we go there, we will talk about that. So the cash basis accounting is not required by law. Generally, small business, they don't have much money to apply or to hire special accountant or auditors, or they don't need to file their business with the stock exchange, right? They don't need to provide information to the publics about their financial statements, right? So they just ignore these important information. Okay, if sale happened today, or you receive cash tomorrow, so you just ignore that. You said, okay, cash happens now. When you receive cash, you just say that, okay, sale happens, right? So it doesn't matter over there because the scale of the business is very small and limited as well. Okay, And the accrual accounting records revenue when earned. So it means unearned revenue is also going to be recorded. You transfer the goods, money is going to be received later. That is unearned revenue, right? Or expenses when incurred, even if you
So it's
receive,
like
please.
so it's like a bill, a receipt.
Yeah, it's like that. You can just bill a receipt. Okay, you will pay me later. That's it.
Oh, okay.
Like what we are doing right now, it is accrual accounting. The assignment 2 I gave you, it is accrual accounting, right? That's it. So we talked about unearned, revenue is a right, and then we also talk about the prepaid expenses and all the stuff. So because time is involved, so you record because financial statements are time bounded, right? Within accounting period, 12 months, right? So that's why we record the transactions when occurred. And when payments are received later, then you record payments for these transactions. Everything is regarding chronologically ordered or with respect to the dates, right? You cannot ignore these kind of stuff. So that's why the chances of embezzlement, fraudulent activities is going to be very minimized. So that's why the law required that one. So normally the accounting is going to be implemented in larger scale businesses, for example, in corporations. And why we do that? Why there's a requirement to follow these gap principles? Because in corporations, those who own the company, they are different, and those who run the company, they are different. Shareholders are different. I have the shares, I am the owner. But can I go to the management and say, that, look, this AC belongs to me, or this building belongs to me, or can I just bluntly enter the CEO office and can say that, okay, give me some kind of accountability. I have 5% shares of yours. No, right? You are only eligible to vote in annual general meeting, but you are the owner. So in order to be on transparent side, so that managers, those who are running the company, they work for those who own the company, shareholder. To minimize this agency problem, the law states that you must follow. So that's why these big companies, they have accountant, auditors. They need to publish their, performances, their financial statements to the public as well. But here, results in incomplete financial statements. You don't care. If you can just count on your fingers, that's it. Even the results are very okay. I earned about monthly 10,000 to 12,000 yen. Okay, it's okay, enough good for me. Financial statements are incomplete, or you don't need to make the financial statements if you're running your own business, small business. That's it, right? So let's talk, in detail regarding accrual accounting and cash basis accounting. So we follow what we are studying right now because we are, implementing the accounting in corporate company or in corporations. So that's why law required that one. So let's discuss in that one. So accrual accounting record cash transactions such as, so it means there are some similarities between cash basis accounting and accrual basis accounting. Yes, because accrual basis accounting also record the cash transaction as well. But cash basis accounting does not record any non-cash transaction. So in cash basis accounting, you won't see any depreciation. You won't see any prepaid expenses, kind of stuff, pre-arrangement stuff. You don't see any kind of like sale occurred, but cash is not received, so you don't see these kind of stuff. So whenever cash received, you just write it down. Okay, sale happened. That's it. So The cash transaction in accrual accounting happens, yes, when you receive cash from customers. Kathleen, see, collecting, even if cash is not here, collection from the customer is automatically assumed that, or it automatically means that it is talking about collection of cash from customers. Receiving cash from interest earned, paying salaries, right? Cash is going out from the business, rent, other expenses. Paying of loans, issuing stocks, required cash. When you issue stocks, cash is incoming or outgoing? Can anybody tell?
If you issue cash, is account payable?
No. If you issue stock, cash is coming in. If cash is coming into the company or going out from the company?
Coming to the company.
Coming to the company, they buy the stock. They
Well,
give it to me.
they buy a piece of paper or electronically page from us, and we receive money. So issuance of the stock is positive cash flow or cash inflow. Good. So accrual accounting also records non-cash expenses as well. For example, sales on account. I sell today, but I will receive money after 3 months. So we record right now, sale happened right now, and cash collection is going to be recorded after 3 months, right? We also record purchase of inventory on account from our suppliers, accounts payable. And when we pay them, maybe we pay them after later, we record then payment at that time. Accrual of expenses, but incurred but not yet paid. Accrued expenses like salaries, salaries payables. Employees work for you whole month and you pay after sometime 3/3 of every month or every first Friday of every month, right? This kind of stuff so that's why expense occurred, but you will pay later. So this is also recorded in accrual accounting. Depreciation expense, non-cash expense. Usage of prepaid rent, insurance, supplies, earnings on revenue when cash was collected in advance. Earned revenue. And earned revenue is your liability. You didn't earn the right to record it as a revenue because you didn't provide the goods to the customer, but you receive money in advance. So that is called unearned revenue, and that is outside the claim other than owners. So that's why we create it as a liability. Okay, now the time period concept. It's only applicable to accrued accounting. Why? Because we are recording the transaction when it happens, and not on the basis of cash, on the basis of date, time. So accounting information is reported at regular intervals, like 1 month balance sheet, 2 months balance sheets, quarterly, semi-annually, 9 months, like that. So the basic accounting period is 1 year. Accounting period is normally